Together here, we've got our closing entries, we've got notes explaining each of the 4 different transactions for the closing entries. And now, once we've journalized, then we're going to post. Okay? And so you've got in your working papers, you've got your general ledgers. And so now we just need to go through this list and post it like we always have. So sales 2160 debit. So you need to find sales in your general journal. And this is still the last day of the month. It's coming from page 8. And if it's a debit here, it's a debit here. So 2160 is our debit. Okay? And what you're going to see happen is that if you have a credit here and a debit here, that zeroes out. So we'll draw a line there. Okay? And that was the whole purpose. We were closing the account. We wanted to get it to 0, and we did. Okay? At the end of the month, at the end of the period, the year, whatever it is, we got it to 0. 410 is our account number. Okay, that's our posting process. And we just go all the way down to income summary 2160. Now this is the first time we've used this. So you will need to go ahead and use the year and the day and the month. Okay, still coming from page 8. Income summary as a credit 2160. And then, because this is the first line, we'll have to go ahead and extend that across. 2160. 330 is the account number. Okay, now that finished that first transaction. Now we're going to the second transaction. So it's income summary twice, but those are 2 different transactions. Okay, so on the 30th, income summary 1483 debit. Still page 8, debit of 1483. Okay, and this is where you have to do the math. 2160 minus 1483. Okay, because a credit balance here with a debit gives us a continued credit balance of 677. Okay, now income summary does not have a normal balance. Unlike any of our other accounts. This one can go back and forth, depending if there's net income, net loss, more sales, more expenses. If there had been more expenses, then we would have had a debit balance. Okay? And that was okay. I mean, that's just how it works. Okay. 677. So we take a quick look back at our partial spreadsheet, our partial worksheet. 677 is our net income. Okay, those numbers should match up. That's what that is. That's basically sales minus expenses. Gives us the net income. Okay, account 330. Now we're posting all of our expenses. So advertising expense, find that on the 30th, page 8. 460 credit. 460 credit. Oh, looky there. Debit, credit, zeroes out, right? Isn't that what we wanted? Done. Okay. And 510 is the account number. Bring that back. Cash short and over. $6 credit on the 30th. Page 8. $6. Debit, credit, done. Right, 520. Insurance expense, 125 credit. Debit, credit, done. 530. Miscellaneous expense, 189. Credit, debit, credit, zeroes out. Supplies expense, 153. Debit, credit, 0. 550 is the account. Supplies expense, 153. Oh, sorry, utilities expense. Oh wait, did I skip one? I did. I didn't. 540. 550. Okay, sorry about that. Utilities expense, 550. Zeroes out. Okay, and that's 560. All right, so that finishes that second closing entry where we close all of expenses into income summary. Now the third, now we've got a balance in income summary, right? We go back to income summary. Okay, we've got a balance in income summary, but that's got to go to 0. So how do we get that credit to 0? With a debit. Okay, so here's our debit for that amount, and that's basically net income, so it gets transferred to the owner in capital. So when we post this transaction on the 30th, still coming from page 8, a 677 debit, now we have a credit and a debit, 0, account 330. It all kind of wraps itself up pretty nice and neat. Okay, Connor Whitney, capital. Okay, so basically again, this is the net income being transferred to the owner. Okay, so 677 credit. And we add that up. So 7443 plus 677 is 8120. Credit, credit, add. 310 is the account number. And that finishes that transaction. And then the fourth one is closing drawing into capital because the owner's been taking out money and we've got to reflect that. So Connor Whitney Capital, a $1,700 debit. So right here, a $1,700 debit. So credit, debit, subtract. So I'm going to subtract the 1,700 and get 6420. And that's our ending balance of our capital for the year. Okay. So ending capital is the beginning capital plus net income minus drawing. And we've seen that on our balance sheet as well, that little calculation. Okay. All right, 310, and drawing 1,700. And this is one of those that we do want to close out at the end of each year. So it's going to zero out. 320 is the account. Okay. So that we've journalized the 4 entries, we've posted the 4 entries, and now that we've closed all the accounts out and we've posted that information into our ledgers, we're going to use these ledgers to create what we call a post-closing trial balance. And that takes us into 8.2.